It's Thursday. We're now to the second to the final trading day of the week, the 21st of March. And this is how we're moving on with all the big news around the U.S. Central Bank or the Fed rate decisions to hold steady 5.25% to 5.5%. As far as the Fed fund rate is concerned, signaling there will be at least 3 rate cuts before the end of the current year. All eyes are now set today on the Bank of England. Andrew Bailey and the rest of his team, we're expecting that around lunchtime in London. So keep that in mind. We've got a whole lot to deal with here on the African continent as well, with the Egyptian Central Bank yesterday announcing that there will be no interest rate meeting next week, because the emergency meeting held just about 2 weeks ago to raise interest rates by 600 basis points sufficient for now, as far as the central bank was concerned, and see the effect and the impact of that in North Africa's biggest economy. But we've got the South African Reserve Bank rate decision in our crosshairs for next week, as well as Nigeria's central bank decision on Tuesday. It's going to be the second monetary policy rate meeting under the new Central Bank Governor Olayemi Cardoso, and of course the next week meeting by the Reserve Bank in South Africa would also be the first one under the reappointment of Leseja Kiagango as the head of the central bank by President Ramaphosa and the rest of the monetary policy. So we've got the season right now, and that will effectively take us into the month of April with a long Easter holiday weekend coming, the markets shaking up a little bit as we speak. So you've got the interest rates period colliding with the end of the month, end of the quarter as well. All of that into the weekend that is just coming ahead, the week that is coming ahead, and the weekend that will be facing next week, March the 28th. Keep those dates and other things on your calendar. Where did we finish off on Wednesday? The Nigerian stock market continued its downward trajectory, a little bit steps down the slope, down yesterday by roughly 280 billion naira as investors balances profit booking, then of course massive transactions and a number of big names in the banking space, as well as non-banking names such as Transcorp, the Transcorp Power, and a few other names in the breweries and consumer goods sector. Just as we got news that the SEC has disallowed the parent company of PZ Cushon, which is based in the UK, to buy out roughly 30% of minority shareholders in Nigeria. Some shareholders of the company, the household consumer product giant, have gone to court to challenge the price at which the PZ Cushon of the United Kingdom is looking to buy out the minority shareholders in Nigeria. That deal has been kicked out by the Securities and Exchange Commission. That's where we are right now, but let's get a few more in the news. The BRVM went up just by 0.1%. That's the composite index. The Egyptian market continued in the negative territory by 30 basis points. The Nairobi stock market had a very strong single-day jump to the upside, 2.49%, as we saw earnings from Absa Kenya, Standard Chartered, and a few others reporting on Wednesday. Those numbers in the banking sectors lifting the NSE strongly above the 100 reading for the composite index. The Zimbabwe stock market remained positive, just about 1.7% Wednesday, while the GSE was better by roughly 0.8%, around 72,419. That's just a summary of your Wednesday trading day. The Ghana market remained also upbeat on the latest deal being hammered out with the International Monetary Fund and the visit of Christalina Georgieva to Accra a few days ago. Let's move on and check through the big stories around East Africa. It's going to be those earnings lifting the Kenyan market. There's a whole lot to digest in those numbers coming through, and we'll take the next few days to walk you through a couple of them. But you've got the biggest news yesterday, I'm sure you did, with the KCB group announcing a formal a binding agreement between a subsidiary of the National Bank and Access Bank of Kenya that will allow Access Bank pick up 100% share of the National Bank. KCB Group says the bank still remain open for business despite the acquisition by Access Bank, which has its roots in Nigeria and doing major acquisitions across Africa since 2002. At least 14 acquisitions been done within Nigeria and across Africa, in East Africa, Central Africa, Southern Africa, since the takeover of Access Bank in 2002 by the late Herbert Wigwe and his partner and friend, Ike Omofaye. That's the big news in terms of acquisitions, the latest in East African corridor, by the way. In the meantime, Kenya, as a Chinese SEPCO Electric Power, he has won the job to repair or upgrade Kenya's oldest geothermal plant. The authorities in Nairobi is looking for how to increase power supply to East Africa's biggest economy and try to support the small and medium enterprises and others as well, and if possible, reduce the cost of power in that country. Ethiopia says it hit more than $1 billion income from power sale in 18 months out of the country, while the EFDB is pledging $80 million for Burundi's agriculture sector. And of course, yesterday you were in the news as well to see the formal opening of the doors of the Fund for Export Development in Africa done in Kigali, Rwanda, by the Prime Minister of the country, as well as the President of African Bank, Dr. Benedict Orama. Those are some of the headlines east of the continent. Let me just walk you through the West African region, and of course, you checking through the currencies. The Naira has been recovering very strongly. We've seen about 25% pullback in the value of the currency at the official market, trading 1,500, trading now below around 1,500 at the autonomous market. And we've seen that convergence coming very closely as we got news overnight that the central bank says has cleared up the valid $4.4 billion of backlog of FX money has been owed to international airlines and other third parties. And that is some good news because the central bank says its FX reserves now around $34.1 billion as the end of the first week in March. That's the 8th of March, by the way. So you've got a whole lot of good news. Then you've got news yesterday. The central bank selling 1.1 trillion naira, according to Bloomberg, to the market in FGN bonds maturing 2027. This was a 19.94% paper that the central bank sold at a yield of 21%, looking to further grab more of those foreign portfolio investments into the market, stabilize the naira, give it some room, some headroom to fight inflation, and then go to the next monetary policy meeting next Monday. That's where we are right now as far as Nigeria is concerned. The final investment decision for the mega $25 billion Nigeria-Morocco pipeline that will go across about 17 destinations before it lands in Europe is being considered. And the head of the NNPC, the state oil company, says that should be done by the end of this year. December, the final month. Let's see if that calendar will be kept. It's a strategic gas export for Nigeria straight into Europe, as Europe looks to Africa to support its diversification of gas imports away from Russia, with the war in Ukraine still ongoing. And Ghana reports an economic growth of 2.9% in full year 2023. That's higher than the revised target of 1.5%. And Guinea is holding central bank held interest rates unchanged at 11% and says is the required reserve coefficient for banks remain at 11%. Let's move it to Southern Africa. We've got inflation data. We've got a couple of data out of Southern Africa. South Africa inflation furrowed to 5.6% in February. South Africa's Reserve Bank is looking at 4.5%. So there's a likelihood that Leseja Kenyan and his team will hold rates unchanged next week when it meets for the second time this year. Inflation is still a little bit naughty in Africa's most advanced economy, and the Reserve Bank says it's not going to blink as far as inflation is concerned on interest rates until inflation's come around 4.5%, which is its target. The FSCA, which is South Africa's market authority, has issued a 475 million rand penalty or fine against Marcus Justy. Justy was the immediate past chief at Steinhoff, in the member of the old Steinhoff messy financials. The FSCA says the gentleman has been penalized roughly R500 million for delivering misleading false financials of Steinhoff over the years, in which the FSC has been combing through And now it looks like the chickens come home to roost on that. Some relief to investors in Steinhoff, Zambia. Let's go to southern Zambia, where bondholders started formal talks back to the negotiating table for that $3 billion debt restructuring. This will be some good news for President Hichilema, who's looking at the conclusion of the DSS program, or what we call the debt framework program of the IMF, with debt with bondholders, and then deal with the whole crisis around the droughts and climate situation impacting crop and food security in that particular country. In Angola, still in Southern Africa, says it's okay about $200 million in lower monthly debt repayments to China's development bank, try to clear up its books and stay on track for some support with the IMF. The IMF concluded its Article 4 consultation with Angola just a few weeks ago. And the Old Mutual says is excluding the profit from Zimbabwe. Old Mutual, of course, is headquartered in South Africa, is taking Zimbabwe out of its profit books for full year 2023. I just said headline earnings because of the red hot inflationary regime in Zimbabwe. And that's the latest from Old Mutual, listed, of course, on the Zimbabwe Stock Exchange. So let's finish it up in the North Africa, where it all started. And Egypt's central bank says it's cancelled its March 28 monetary policy meeting, mentioned that earlier, and says the February 6% raise in interest rate is good enough, at least for the moment. Morocco central bank, the Bank Al Maghrib, has held its benchmark interest rate that was on Tuesday, 3%, says that's also enough right now for its inflation targeting, as well as price stability within the second biggest economy north of the continent. Indonesia, consumer prices dropped 0.4% in February. Some good news that the administration could use in Tunis. Libya, central bank, however, has directed all banks to implement 27% hike in FX rate fee as the country tries to manage the little liquidity of foreign currencies that it has in its portfolio. And finally, Egypt's primary market is looking at 64.1% growth in securities issuances that could reach 60 billion Egyptian pounds in the current year, 2023-2024 period. And those are your headlines for this Thursday, the 21st of March. I am Boason Omofaye. Have a great day. And you can watch the show again online at our website, www.frontierafricareports.com. You can subscribe to our YouTube. It's free at Frontier Africa Reports. Also go to our social media, all our social media handles. Subscribe, follow us, and send us your comments and queries as they need be. Thank you so much. I'll see you soon.